आज खाने पे क्या ऑर्डर किया जाए? पिज्जा and top it up with this one. And
Oh, hello. What's going on? You're ordering food again for the 7th straight day?
अरे इट्स ओके यार, घर का खाना खा के बोर हो गया है एंड प्लस इट्स जस्ट अ क्लिक अवे.
क्या हुआ?
यार शायद बहुत ही ज्यादा बाहर का खा लिया है यार. स्टमक इज वेकिंग.
बोला था ना, अभी मैं मेडिसिन ऑर्डर करती हूँ. इट्स जस्ट अ क्लिक अवे.
Hey folks, here Rachana Ranade here and I welcome you all to an interesting IPO review video of Medplus Health Services Ltd. It's raining IPOs and just in case if you catch any cold or fever, then Medplus. Okay, too bad. Anyways, let's get started with what does the company do. Okay, these are the four major product mixes. I mean, there's a nice product mix which is available of four major things. Which are the four major things? Let's understand. The very first one is branded pharmaceutical products. Okay, simple one, very easy to understand. Second one is private label pharmaceutical products. So I'll give you a simple example. It's as good as they will also sell crocin. Under which one? Under the first one, which is branded pharmaceutical products, but they also sell Pararite. What is Pararite? Pararite is also contains paracetamol, which is basically the active pharmaceutical ingredient which is used to cure fever. Okay, in simple words, possibility number one, they'll send a branded medicine to cure your fever, or possibility number two, they'll sell a medicine which has their own brand, but they'll get it manufactured from someone else. Okay, something like a contract manufacturing. So that's nothing but private label pharmaceutical products. Third, what do they sell? They also sell branded fast moving consumer goods, basically your personal care products, which will be in the branded category, or they'll also sell private label consumer goods, similar to second. So I hope you've understood. First and third are similar with the branded thing, and second and fourth are similar with the private label thing, but all in all, two major things: pharmaceutical related products, and second one is FMCG related products. Let me remind you all one more time that all these creative people are spammers. That's how my account looks like. Also remember, I never give my mobile number in any chat. I neither have an advisory nor do I give any stock tips. Now let's understand a bit more about the company. The company is the second largest pharmacy retailer in India. Now when I say second largest, in terms of what? In terms of revenue and in terms of store count. Okay, both these are as at 31st March 2021, and this is as per a Technopack report which is there in the RHP of the company, right? The company was founded in 2006 by Gangadi Madhukar Reddy, and initially it started with just 48 stores in Hyderabad, and now they have more than 2,000 stores across India in the states of Tamil Nadu, Andhra Pradesh, Telangana, Karnataka, Odisha, West Bengal and Maharashtra. Now what sort of approach does the company employ? Let's understand it. They employ a data analytics driven cluster based approach for stores network expansion, and I hope you have understood nothing. Okay, so what is that? Basically it's a cluster based approach for stores expansion. Means what? You can imagine that they first set up a warehouse. Okay, once they set up a warehouse in some key location in any city, they'll go about expanding the stores around the warehouse. Okay, so once the warehouse is at a key location, then setting up stores around the warehouse becomes comparatively easier for them. Okay, that's how they go on increasing their network. And as per again the Technopack report, they are the first pharmacy retailer in India to offer an omni-channel platform since 2015. Now what do I mean by omni-channel? Simple. Possibility number one, I go to their store and I purchase the product. Simple, straightforward. Possibility number two, I call them and they'll deliver the medicines at my home or wherever I want them to be delivered. Possibility number three, I will place an order on their online platform or through their app maybe, and then they'll be delivering it at the desired location. And possibility number four, they call it as a click and pick. So you click, you place the order and you pick the order at the select store. Okay, so that is what that is, an omni channel. In simple words, it will be a mix of offline as well as online. Okay, So one more interesting point I found in their RHP, which mentioned that 93% of their online orders they were able to deliver within 2 hours, not pan India, but in select micro markets of Hyderabad. Well, when Mr. Reddy was taking up higher education, he came across a WHO report which mentioned about fake drugs being sold in India. So that was the time when an idea struck in his mind that whenever I would start a company, I would ensure that in my stores, in his stores basically, he would ensure the genuinity of the medicines being sold. Number two, he said that he would focus on the fill rates. Fill rates is basically good inventory management, and number three, best rates being provided to the customers. Okay, now I found this data again in RHP, which mentioned that if any customer places an order greater than 1,000 rupees, then a person is eligible to discounts up to 20%. If the order size is between 200 to 1,000, then a discount of up to 10% is given, and if it is below 200, then no discount. But if I'm talking about placing orders in the FMCG space, then roughly up to 5% discount is given. So please understand that whenever a person goes to a medical store, generally we say that there are two types of diseases for which he goes to buy a medicine. Number one, it could be an acute disease, and number two, it could be a chronic disease. So whenever I talk about acute disease, that person is not price sensitive. He wants the medicine by hook or crook. But if I'm talking about a chronic disease, just as an example, diabetes, that person knows that he's going to consume that medicine for a long span of time. That person is price sensitive. So such companies are ideally going to ensure that all those patients who are into the chronic disease category, they should tap into those customers, because they will be price sensitive and would want to get higher and higher discounts on their medicines. Now let's move ahead with the industry analysis. The entire Indian domestic pharmaceutical market is expected to grow at a CAGR of 10%, and the entire size of this market is valued at 1,500 billion rupees. That's huge, right? And it's also expected that whatever CAGR we grew at in the last 5 years, which was 10%, ideally the expected CAGR is also in the similar lines of 10%. Going ahead with India's pharmacy retail market now. So first we talked about overall domestic pharmacy market. Now we are talking about what? Only pharmacy retail market. That is expected to grow at a CAGR of approximately 11% between financial years 2021 to 2025. Now if I talk about organized pharmacy retail market, I hope you are understanding the how we are drilling down entire pharmacy market, pharmacy retail, and now from that we are going to only organized pharmacy retail. That is expected to grow at 27% CAGR in the financial year 21 to 27. And now we are moving to India's e-commerce pharmacy, which is expected to grow at a CAGR of 42% between financial years 2021 to 2025. If I'm talking about private labels in pharma, you remember I had given the example of Crocin versus Pararite for this company. So this private label pharmacy, private label in pharma and wellness is expected to grow at a 36% CAGR, again between financial years 20 to 25. Have a look at this chart now. This talks about the retail market in India. And if you see, this entire retail market size is $796 billion. Oh my god. Now, out of this entire market, which includes what? Food and grocery, jewelry and watches, apparel, accessories, footwear, consumer electronics, home and living, and pharmacy and wellness. Now, pharmacy and wellness accounts for approximately 2.9% of total India's retail market. Okay, now let's understand what is the position as at financial year 2020. Out of the overall size of $796 billion, pharmacy and wellness accounts for $23 billion. Now let's look at the next two columns, which talks about how much is the penetration or share of organized retail. Now if you see share of B&M, what is B&M? Brick and mortar. Brick and mortar means actual shops. Okay, so brick and mortar is accounting for roughly 7.8%, whereas share of e-commerce retail is 2.2%. Clear till here? Okay, now if I move on to expected figures of financial year 2025, the size of pharmacy and wellness will grow to $36 billion. So it was $23 billion in financial year 2020, and it is expected to grow to $36 billion by what? Financial year 2025. Now the share of brick and mortar is expected to be around 11.2%. So again compare, from 7.8%, it's expected to grow to 11.2%, and from 2.2% share of e-commerce, it's expected to grow to 8.4%. What are the CAGRs? CAGRs are 26% and 25%. Okay, so all in all, roughly even I can say 25% is a good CAGR, right? Who are the key players in this segment? They are Apollo Pharmacy, Medplus, and Pharmacy. Now, all these are examples of what? Medplus, Pharmacy, or Apollo Pharmacy. All these are examples of pharmacy-led retail chains. Okay. Now, all these retail chains, I can compare with whom? Independent pharmacy. Okay, so just to give you a quick example of what's an independent pharmacy, assume that I want to start a shop which sells medicines. That will be in the category of independent pharmacy. I might not run a chain like Medplus. Okay, so if you typically see how much discounts are offered by pharmacy-led retail chains, they offer typically up to 20% discount, whereas an independent pharmacist might be able to give you a discount up to 10%. Now let's move ahead with the peer comparison of Apollo Pharmacy versus Medplus versus Wellness Forever. If you see the store count as at 31st March 2020, highest is of Apollo Pharmacy, followed by Medplus, and then Wellness Forever. If you see the rate at which the stores are increasing, Apollo Pharmacy stores are increasing at a CAGR of 9.6%, Medplus with 12.2%, and Wellness Forever at 26.7%. But please understand, a higher CAGR is possibility number one because of lower store count. Okay, if your base is low, the CAGR appears to be very high. Okay, now how much were the net store additions? Let's understand. For Apollo Pharmacy, they have added 690 stores from 31st March 19 to 31st March 21. Medplus has added 428 stores, but Wellness Forever, whose CAGR was 26.7%, they have added 84 stores. I hope you have understood what I meant by a lower base leading to a higher CAGR. Okay, if I move on to store mix now, Apollo has a high presence in South with 67% stores in South, followed by East 14%, then West 9%, and North 11%. Medplus has majority of their stores in South India with 80% stores in South India, followed by East 12%, and then West with 8%, whereas Wellness Forever has 93% of their stores only in the West, followed by South with 7%, right? These three I discussed in the previous section as well, so I'm just talking about these three right now for stores mix. Now if I talk about the next one, which is where are the stores located? In metro cities, Apollo Pharmacy has 40% and Medplus has 53%, Wellness Forever has 69%. So talking only about Medplus now, metro cities, they have presence of 53%, 26% in tier 1, 17% in tier 2, and 4% in tier 3. I also happen to read the strategy that this company uses. First, they start up with metro cities, then slowly they'll penetrate to tier 1, then to tier 2, and then finally to tier 3 cities. And now to my favorite part, which is financial analysis. Let's start with the balance sheet analysis. If you see, their property, plant and equipment has increased consistently. As at 31st March 19, it was 470 millions, and slowly steadily it has moved up to 871 millions as at 31st March 21. In fact, half year ended September 30th, 2021, it has moved up to 1074 million rupees. Now you might be like, why am I focusing more on property, plant, equipment? If you remember, I had told you that they work on omni-channel, agreed, but they also have a significant portion in their brick and mortar model. In simple words, their major strength is increasing the number of store count. Okay, as and how their store count increases, ideally their property, plant, equipment is going to increase, right? Moving ahead with the second one, which is inventory. Inventory has also significantly grown from 3,940 million in 2019 to 7,499 million in 2021, and as it half year ended September 30th, 2021, it has gone up to 8,100 million. So in their commentary, in their RHP itself, I found out two things. Of course, as and how the store count increases, the inventory is also going to increase, but especially during COVID, they had stacked up more and more inventory is also what I found in their RHP. Now, what is important? See, please understand, if their fixed assets are growing and if their inventory is growing, as an analyst, I need to understand whether their fixed asset turnover ratio is good and their inventory turnover ratio is good. In simple words, if they are investing in fixed assets, I expect that more revenue is generated after investing in more and more of fixed assets. Is their FATR, fixed asset turnover ratio, increasing? Let's check for Medplus. It has gone from 51.9% to 53.7%, but to 41.8%. Okay, so fairly you can see a drop in financial year 2021, not a positive sign for sure. Okay, it'll be interesting to see the FY22 data as well, right? Now moving ahead with inventory turnover ratio. Inventory turnover ratio also for Medplus has gone from 4.9 to 4.5 to 3.5. So inventory turnover ratio is unfortunately again on a decreasing trend. Ideally, higher the better is the scenario. So it will be interesting to watch if both these parameters, fixed asset turnover ratio and inventory turnover ratio, improves. Okay, moving ahead with the balance sheet, you can see that other equity has risen from 2,911 million to 7,945 million as at H1 FY22. It's mainly because of securities premium. And an amazing point in that balance sheet, you can see dash 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 dash. What is that? Borrowing. No borrowing. Fantastic debt-free company. I really give this as a big thumbs up. Moving ahead with revenue, I'll not read out the entire revenue figures. Important points I'll directly tell you. Revenue has grown at a CAGR of 10.53%. EBITDA has grown almost at 22%, and PAT has increased at a mind-blowing rate of 74.28%. Okay, I'll just read out the PAT figures. PAT has grown from 119.22 to 631.11 million. Okay, so I hope you have understood that there's an amazing jump in PAT as well. Moving ahead with their revenue breakup now. Sales from goods is almost 99% of their total revenue. A very minor revenue comes from sale of services, and other operating revenue is just 0.61%. This is 2019. If I'm talking about 2021, also more or less same, 99% again from sale of goods, and balance 1% from sale of services and other operating revenue. By the way, other operating revenue comprises of display of advertisement and other business support income, right? What is important? This slide is really important, which talks about revenue breakup from branded pharmaceutical products and branded FMCG, which is currently at 89.64%, which used to be 95.52% in 2019. I'll tell you the importance of this. Just wait for another minute. If I talk about the next one, which is revenue from private labeled pharmaceutical products, which used to be 4.48% of the total revenue in 2019, it has moved up to 10.36%. Now, please understand this point. Revenue from branded pharmaceutical products is going down, and revenue, I'm talking about not in absolute figures, I'm talking about the percentage of total revenue. Okay, percentage of total revenue from branded pharmaceutical products is going down, whereas percentage from private label pharmaceutical products is increasing. How does that impact? Please understand, gross margins are always going to be higher in private label as compared to branded pharmaceutical sale, and that can be easily seen from the last line item, which mentions that their gross margins used to be 18.86% and which has gone up to 21.02% in 2021, and which has further gone up to 21.3% as at 6 months ended 30th September 2021. Moving ahead with cash flows, nothing really to be talked about, but the good part is that they have positive operating cash flows. They did see one dent in 2020 because of obvious reasons, but at least for the 6 months ended, that is 30th September 2021, they do have a healthy cash flow from operating activities. Let's move ahead with the valuation and IPO details. First, let's talk about EPS. EPS, if I'm talking about basic EPS, it has gone up from 1.33 to 5.99. And if I'm talking about the latest data, 6 months ended 30th September 2021, it has further gone up to 6.16. Okay. If I move ahead with PE now, PE is at a lower band. Oh, by the way, the details are that the IPO price band is 780 rupees to 796 rupees. And with this, the PE price band, at a lower price band, it is 130 times. And at a higher price band, PE will be 133 times. If I go ahead with return on net worth, from 2019, it has improved from 4.09 to 8.74% as of 31st March 2021. If I'm talking about net asset value per share, at 31st March 2021, it was 65.37, and as at 6 months ended 2021, 30 September, it is 71.67. So basically, price to book value at a lower band is coming up to 10.88 times, and higher band it is coming to 11.10 times, 11.1 times. Okay. Question is, what about peers? Are they also trading at a similar P valuation, at a similar PB valuation? Point is that there are no listed peers. Okay. So unfortunately, we can't compare it with any other entity, listed entity basically. If I go to risks and litigation, to be honest, I did not find any major risk or any major litigation which was associated with the company. So moving ahead with IPO details, IPO opens on 13th December 21, closes on 15th of December 2021. If I talk about the IPO range, I have already talked about it. Lower band at 780, upper band at 796. It's a mix of fresh issue and OFS. Fresh issue is aggregating up to 600 crores, whereas OFS is aggregating up to 798 crores. Pre-issue shareholding of the promoters is coming to 43.16%, and post-issue holding is coming to 40.43%. But Mr. Reddy, whom I talked about in the first section of the video, he is not going to sell anything in the OFS, right? Major objectives of the issue are going to be funding the working capital requirement and other general corporate purposes. And then the final question, will I apply? My answer is yes. Only question is, through how many demat accounts, that I will decide based on the total subscription and based on the GMP details. I'm going to do a live stream on 15th of December at 10:30 a.m. So don't forget to check this live stream on my YouTube channel. If you want to learn more about how do I analyze IPOs, you can click here. If you want to know more about all the IPOs which came up in 2021 and that I covered on my channel, you can click here. Till then, take care. Jai Hind.